Hey everybody, it's Pete. Welcome to a new episode of today's Best Stock Picks. It is Monday morning, June 29th, 2020. It looks like 4th of July is officially closed here in the United States. I hope you're being safe. That's really the number one thing to be focused on right now. I hope you and your family are doing the right thing and Zooming each other like you and I are doing right now. Hopefully we'll get through this quickly. If the next couple of months, which I can't believe I'm saying, a lot of people I know right now aren't going back to the office until at least September. But we'll get through it. We're tough. That's what our country's all about. But right now we're here to talk about some opportunity. And I'm going to tell you right now, heading into the week, we have the potential this week to have a choppy week. There's a lot of indecision right now. We're sitting right at some key levels, specifically in the market, specifically in the SPY ETF, which we're going to dive right into in a second. First, I want to thank you for watching the video. Our community is growing, and it's very exciting for me to be able to share my 20 years of trading experience, getting a lot of good emails and feedback in the comments about helping people, and that's really what inspires me to do it more. I actually got somebody who said, I don't understand why you're doing these videos, and it really comes down to it. Trading is hard. It's hard, and if I can give back and help you get through that a little bit more through these videos, then I've done my job. If you want to take this another step further, obviously click down and subscribe so you get all of the updates. But even further, if you'd like to trade together in real time, 100% make that small investment in yourself and get into the 30-day boot camp, and you'll see my trades in real time, as well as my swing trades, stuff that I'm holding a little bit longer. So we get that question a lot. Can we see your actual trades? And the answer is yeah, I call them out in real time. So we're going to head over to the charts, and I just want to give you the idea heading into the week. Because we're at such a important level right now, and the reason for the bounce off the lows in March has kind of flipped the coin to the other side, it seems like the selling pressure is just a little bit heavier, although we're not really that negative right now. In the futures, we are negative. It's early still. What I want to, I don't want to use the word tip, even though I'm about to say it. The advice, I don't want to use the word advice either because it has to be taken into context, is pay attention this week. If this week becomes a inside week, if the week starts flip-flopping back and forth between positive and negative, do the smart thing. Be super focused on individual stocks because the market at that point probably won't help that much if this happens. I'm helping you with if-then scenarios because that's what real great traders do, and I want you to become a real great trader, is being prepared. So I'm preparing you on Monday morning, 3 hours before the market even opens for this coming week's trading. If we are choppy, if volume is light, be very stock specific and be more diligent with the amount of money per trade that you put in on your first entry, because the wind behind your sails, the obvious market bias is really not there right now. We're still kind of stuck in this window, and we'll take a look at the SPY again. And that's when you go heavier versus working orders. In a market where, like 3 weeks ago, I keep saying it prior to the Fed announcement, when the market was, you're just buying and stocks are kind of like flying off your fingertips and you're making money. We're not in that environment right now. So what I want to implore you to do is to learn to work your orders a little bit. So if you think a stock is here and you think it's going up here, make your first entry, because the market's not as clear right now, a little bit less share size, and work your order and kind of add a little bit more shares as it moves in your favor. It's just the right thing to do. And quite honestly, that's not a bad strategy in good markets, except in good markets, we kind of feel like we could have follow through a little bit cleaner. So we're going to head over to the market right now, and we're going to set up. We got a pretty decent list. And the interesting thing about the stock picks this week are that we have stuff on both sides of the market. The short side of the market is still not as good as the long side, because we still do have that longer term 4-month bullish order flow. But the first stock we're going to discuss today, after we look at the market, is Facebook and the collapse on big volume that we had on Friday. And what does that mean setting up the next opportunity to buy Facebook? So let's head over to the charts, and we're going to start out with the market. The big level in the market, this is the 200 period moving average. It's the line in the sand that everybody uses, going back to all the way back to Edwards and McGee and their book way back in the day, which I think was 1938, if I'm not mistaken. But anyway, the 200 period moving average is the simple period moving average that I have in the chart. It's the line in the sand of bullish or bearish environment, and the market kept hitting it on Friday. When I say the market, I mean the SPY. We kept hitting it on Friday, finding support, hitting it on Friday, and just did not collapse through it like we did. But the market did finish well offered, And if I take this off of the screen, well, let's see if I can take it off without adding another one. I've been talking about this box and the SPY for a while now. And for those of you that are new to the channel, this was the bullish order flow. This is where we broke that bullish order flow. So we set new levels. Here's the high, here's the low. And breaking below this would technically set off a new trend in the order flow in the opposite direction. And again, if you watch the video that we put out last week, you could read between the lines here, read the notes in the direction of the whole song. A lot of closes below the open, and the closes below the open were on significantly more volume. So there's much heavier selling on the down days than there is buying on the up days, which is not good if you're bullish. So we need to pay attention this week and not just be buying blindly. If you're in the boot camp and you understand reading the tape, you know that we use certain price levels that matter to us, that tell us instantly whether or not we should be looking for longs or shorts, and that's used in the context of the bigger picture. So if you're not familiar with how to do that, or you're not sure how to instantly know whether or not you should be long or short, or when the scenario has changed, which is a big deal. A lot of people get stuck in a trade and they can't get out of it. Again, click down and just see how other traders are doing in the boot camp. Don't take my word for it. Go down and see how other people are doing. And only you can decide if you want to invest in yourself. So that's where we're looking at in the market. Obviously, this level right here, which is the 298, 299 level, right around 300. It's really 300 in the SPY, 3,000 in the futures. That's the number you need to absolutely set an alert for. As we discussed, Facebook just took a shellacking on Friday. So we are essentially now going to be setting new trend line in Facebook. And again, if you know how to draw trend lines properly, you don't go through any price action on the way up. You do it from the lowest low to where you think it's significant, where a particular trend started, up to the highest low, and we broke. Now, if you're a regular viewer of the channel, you know that I don't use one candlestick to determine a change of trend. But when we break it, it's a potential change of trend. So here's technically the box that Facebook would be in right now, very similar to what we just drew in the market. That's technically the box. Now, Facebook would have to trade out of that box to be considered a change of order flow. So right now, it's a potential change of trend. Now, what I drew here, this longer term line is from the monthly chart. And you can see here, this is an area that matters to Facebook. It kept being resistance and then finally popped through to the upside. But prior to all of this, this was really the level it was having a hard time getting through. So that's kind of why I started to, and again, if you're new to the channel, we're focusing on what is the real price. You probably noticed here, I didn't draw it all the way up here. And that's because this is the price that it's having a hard time getting through. Act like a professional. What is the real price this stock is struggling with? It's not the one all the way up here. Don't blindly look at a book that was written a long, long time ago, or somebody who doesn't know what they're talking about. If you really understand order flow, if you want to understand order flow means real orders. What is the real price orders are having a hard time getting through? That's the real price. Anyway, that's a side note. This is where we are right now. So obviously we're trading lower again today. We're down 2.68% pre-market. We don't know where that's going to be, but this was a pretty decent selling. So what we're looking for, and just as a side note as well, if you're a regular viewer of the channel, this was an inside candlestick breakdown, and that is one of our biggest, simplest trading patterns. Looking for trend days, I get questions about that all the time. Why do I trade that pattern? Here's another one that led to a big trend day to the upside. That's why. You get these kind of days where you can make your entire week in one day. So, and again, another thing that we discuss every day in the boot camp. So anyway, Facebook, we're looking the best case scenario for a unbelievable buy. Some people are talking around 200. If it should happen to punch through 100, through 200 and head to the downside, this 193, 195 area would be where I'd be starting to look for a move to the upside. In case you don't know, there's a social media boycott specifically on Facebook for advertising. I don't want to get into the whole political aspect of it. My channel has nothing to do with that. We're talking about reading the tape and being better traders and setting up ideas. That's the reason that they're giving after the fact. We know that the stock is still a good stock. It's a story that's in the stock right now. This could give us an amazing opportunity to look for a swing trade long. That's the level that I'm looking for in the stock right now. So some other stocks, we have Micron has earnings after the close today. One stock that's in the news a lot today, it is a biotech stock, VXRT. I'm going to give you the same advice that I've given about NKLA and INO. Amazing stock if you're a day trader, amazing stock if you understand how to get in and out of orders quickly, which, by the way, watch the Stocks for Breakfast video that I just did. It talks about order types, which will help you tremendously. This will be in the radar again today, but you need to be an active, fast, decisive trader to pick something like this. And you can see here it went from 14 down to 8. That's a big move if you get stuck in the position with 3, 4, 5, some people even 10,000 shares because it's a cheap stock and they can afford to, which, by the way, that's a dumb reason to get 10,000 shares. But anyway, you can see yesterday was a good example of why you need to make fast decisions if you can, and the stock's bullish the way we interpret it when we read the order flow. It could be a really good opportunity. You might get a trend day like this as well. So it's in that same vein of those other stocks. Big was called out quite a few times in the room on Friday. Really, really good breakout on heavier volume. And again, you know, that's super important to me. Look at that volume spike. Again, there's news, there's earnings. You dig into the research. I'm just helping you with the tape reading here. Love the fact that it broke out on higher volume through 20-day breakout as well. And actually much longer term breakout levels. So you can see here, we cleared this 38. So the trade for me today for a new swing is I'm looking to make sure it stays above 42. That's really the level. FSLY, very heavily traded by the community last week. I actually put out a message last week that I would not be initiating a new swing trade long, but I would be day trading it long. That still applies. The volume, as far as looking for exhaustion, we have started to see massive volume spikes after this move to the upside. And again, if you're not familiar with the terminology, this is a really nice fuel candlestick, large body candlestick breaking out of a trading range. And it looks like we're getting a little bit of, not quite distribution. Distribution to the upside happens when it's a wider trading range. We still have momentum to the upside, so this would be more exhaustion. So we have fuel leading to exhaustion. I'd be very hard pressed to be initiating a new swing trade. I would absolutely, though, still be looking to day trade it. You can see on the intraday charts here for the last couple of days, it gave us some nice moves to the upside. But let's go back out to the daily charts. Dollar Tree and Dollar General both actually kept popping up in our scans yesterday. They're going to be pretty active again as we start getting into, they're not necessarily stay-at-home stocks, but you can see they're both approaching new levels. I would set a buy stop for Dollar General above 193. We don't want to get caught up in this noise where it keeps getting up there and crashing. We want it to be through that level, and we're only setting an alert. We're not actually setting a buy stop order. And DLTR, very similar to that, where we had the monster gap pulled back, and now it looks like we're getting some larger bodied candles, which means the stock is active. So you can see here, we're right at the breakout level around 92, 95. So if I was swinging this for a longer term trade as a swing trader, I'd be looking for it to break 95. And again, as we discussed before, not with any kind of size until it cleared 98. Let's see, DocuSign, my gosh, this stock just keeps going. It's actually gone parabolic now at this point. We can see how far away from my trend line. Now, on Friday, we did get a massive spike in volume, but what's interesting about that is it's a big spike in volume that it didn't happen after momentum. It's happening after a breakout, which pretty good. It's still a pretty good stock to be long. Etsy, another one that's meeting some of the same criteria. Look at the volume over here so we don't cloud it. We actually thought we had a really nice breakout for a swing trade on Friday, and I still believe that. We had a nice consolidation here after momentum move. That's literally what you want to see. I do like it. If you're not long already, above 104 would be the level I am personally looking for. TWLO, Twilio, also a very clean breakout, similar to what we just looked at in Etsy. Excuse me, Match.com as well. We got to go out a little bit further on Match to see where the levels are, and you can see that we're trading at ATH, what we know in the community as all-time highs. Another one you need to be looking long. And again, this is not extended. You can still get that swing trade out there at a good price. Overstock.com has been one that's been actively traded. $28 stock, has good liquidity, good volume, good intraday movement. You just need to be super disciplined in this stock in a way that where you read the tape intraday, which you know in the room, the opening price is that level. You can see here when it's bullish, but trading below the open, it doesn't recover. So you need to be long this stock when it's above the open, and those are the better trades in that stock right there. On the short side, we actually got a decent list, and it seems like Cardinal Health breaking down, Prudential breaking down, excuse me, wrong stock, Prudential, Nike after earnings. which now Nike, actually, this is a good example here in Nike. You can see we drew the same box that we had in the SPY, where this is the window, this is the trend, this is where we broke the trend, and kind of dancing around here. Earnings came out, and the stock is now trading lower, and it looks like we're kind of hovering right at that level. So we're looking for a potential change of trend, order flow to the downside. Financials last week in a big way, but before we get to the financials, WYNN just keeps melting lower. LVS as well. So these have been short sale ideas that we've been looking at, as well as the financials. Capital One, the bank stress test today. Again, the news will be in play today. Goldman Sachs, PNC, and of course, JP Morgan. You can see that they're all well offered, closing on the lows with room to go. The only other one that we're looking at a short sale here is Foot Locker, which kind of sitting right at the neckline if you drew a head and shoulders pattern, which I don't use. They're not as reliable as they used to. So again, the key to this week and the key to surviving this week, if we end up dancing right around this really psychological level and heading into the weekend, we have a 3-day weekend coming up, which will mean that trading has the potentiality to be lighter over a longer weekend where people won't be heavy heading into the 3 days of news, really. So we might see volume start to drop off later in the week this week as well. So take advantage of when volume's good, learn to work those orders, and be prepared. Have your line in the sand. We know you want to be a buyer and where that situation changes. So that's today's episode of Best Stock Picks. We laid out a really good plan for Facebook and the scenarios to look for that. That's going to be the trade of the week, looking for a good swing trade. Can you trade it short based on Friday? Long term, it's still a really good buy. Long term, it's still bullish order flow. You could day trade it short with very strict criteria of using that open price as the number that you're going to read the tape with. If it changes, don't be chasing it if it happens to bounce. But again, that's not an A-plus trade. I had some questions this week. Thomas asked me to put out a video about what A-plus trade setups look like. We'll do that. I probably won't be able to get to that today, but we'll get to that as well. So have a great day, everybody. If you find these videos helpful, absolutely click down and subscribe. And if you have comments or feedbacks about any of the videos or something you'd like to see us potentially review, absolutely leave that down there too. Have a great day, everybody, and be safe.